Good morning, good afternoon, and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live, and it is a very, very special episode. It is episode 100. We did it, guys. We actually lasted 100 episodes before CK and Pete Rizzo and DB took us off the stream. I'm excited. It is I, your host Q, coming to you yet again from my mother's basement. I am joined by my co-host P. Unsure if P is actually here or not. He kind of went missing last night. So TBD when we see or hear from him again. There he is.
I'm back. I was going to go off camera and grab some props for what we're talking about today, but didn't have time. I'm going to do it live. In a moment, I'm going to hop off, go steal some stuff from other rooms. But yeah, man, crazy times.
I know, right? I can't believe we made it to 100 episodes.
I know. It's wild. I don't even know how many I've done with you in the recent history, but I mean, how long have we actually been doing Bitcoin Magazine Live with Chris? When did we start doing that?
So full transparency, Chris is the only person here right now who's actually done and been a part of all 100 episodes.
Well, I am going to inject there because I actually did the proto Bitcoin Magazine Live.
Doesn't count.
It may not count. It may have been a degenerate, just absolute chaotic, obscene set of conversations, but they were high signal. They were very high signal. Yeah, there were Twitter Spaces, but those don't count because Bitcoin Magazine Live in this incarnation is video Bitcoin. Chris, when did we start doing this?
So I actually know. So my first day was November 30th. And they're like, hey, in 48 hours, we're doing a live stream. Can you put this together? I'm like, I don't know, but let's go for it. So December 2nd is when we started of 2021. So yeah, pretty crazy.
It only took us 6 months and a lot of vacation days to get here. Also, shout out to the days when we didn't stream on Fridays.
We were setting up for the conference. That was a large task, but yeah, no, it's
yeah, man. The conference. Holy shit. I slept less. I could pull up my phone and just show it and the number of hours. I probably have shown both of you guys, but it's a little obscene. Sleep is a competitive advantage, right? The more sleep you get, sleep is important for memory consolidation, for clearing sort of fatigue poisons out of your brain, replenishing neurotransmitters, all that stuff. If you don't get enough sleep, you can't really learn. And yet, leading into the conference, we just fucking plowed through it, got it done, did what we had to do.
You thought zombie companies were bad. They're zombie people. And I'm not talking about the people that were doing bath salts in the mid-2000s. I'm talking about the lack of sleep. But he put on an awesome conference with the programming. It was a team effort, but it was great nonetheless.
Oh yeah, for sure. It was definitely a team effort. I cannot take full credit, even for the programming. Harper, Brandon, so many people were part of that team. And then just the larger, the news desk, the operational requirements, just everything. I just got to sit there and be like, beep, boop, boop, and move programming around, decide who's going to be on stage, who's not going to be on stage, think about the themes, the topics, all that shit. But it's a production, my friends.
Also,
I'm not going to say it's the heart.
Don't forget your electric scooter riding around the convention center.
Yes. I did have my fitness tracker on, and I did, not even including the scooter, I ran a half marathon every day during the conference. My blisters had blisters on my feet, but I also had this dope little scooter. People would see me I would zip around and pull up with the little wheel, and people would be like, who the fuck are you? And I'd be like, and then I would disappear.
Your level of importance was the type of scooter you had. So P had the electric one. Q and I had the
No, I didn't have a scooter. I was riding around on this. I was so unimportant they wouldn't give me a handle. That's how unimportant that was.
That's what I meant, Q. I had the one that you have to kick your feet, in order to go. And then Q, we can't afford this, so you're getting the mini skateboard.
This was way too small for my giant ass feet, and I ate shit a couple of times. Shout out to the people who watched me eat shit in a full suit after GA day one and were crowding around me, helping me get up. And I was like, no, I'm good. I gotta go. And literally just got back on the board and rode. because I'm a badass. Reminder, Bitcoin 2023 tickets are on sale right now. Lock in those tickets before they go up in price on July 1st. I don't want to hear bitching. I don't want to hear complaining. Tickets are never going to be cheaper than this, so lock them in right now. We have a jam-packed and exciting 100th episode, and also our bosses are out of town, so we get to do whatever the F we want. So today's stream will actually be a little bit shorter. We're only going to go for just under 2 hours, and we're going to have a giant spaces this afternoon to recap what's about to happen out of DC, out of Jerome Powell's mouth in the FOMC meeting. So once this is over, hop on over to Twitter. We're going to be continuing the conversation there with a really awesome panel. But I think let's kick things off with news and notes. And my smooth brainness found some Bitcoin in a place that it shouldn't have been. I'm going to leave it at that. But to be honest, I'm really embarrassed. And
you had your
potentially
Celsius, didn't you?
No. Honestly, I'm starting to think it might be a worse place than Celsius.
That would be hard to imagine. It's hard to imagine. The only thing I can imagine being worse is a brain wallet. But that's not true. That's not true. Could be Mt. Gox or any number of other places. So before we go into that, though, I just want to, pump the Spaces conversation we're going to have on Twitter Spaces a little bit later. Every what is it? How often do they have these meetings, Q?
Every 6 weeks.
Every 6 weeks. So every 6 weeks, Jerome Powell and his group of lackeys, they go into a dark room. They light special golden incense burners, like out of Arabian Nights or Aladdin, with a weird like curling handle. They light those. They put ashes from the previous heads of the Federal Reserve. They light that. They inhale the smoke. They rub old mayonnaise all over their bodies. And then they decide the future of the United States financial markets. And those have repercussions for the whole world. So right now, I have it on good authority that Jerome Powell is oiling himself up, rubbing the mayonnaise all over his body. He's doing push-ups. He's got to look swole on camera. And they're going to release some important information. So I'm excited.
Pete, were you in a fraternity in college?
I was not. I am.
You're a G.
A little allergic. I'm a what?
You're a goddamn G'd is what you are.
Yeah.
The only reason I ask, honestly, is because I feel like you would have excelled in fraternity rituals. You really would have.
It's true. But look, we can't have it all, my friends. We can't have it all. So let's dive into it. We got some interesting stuff to talk about today. Q, you want to take us through it, Chris?
Yeah. Let's figure out some of this. Actually, let me ask this. Do we want to stay on this FOMC stuff for a hot sec, a little bit longer, maybe talk about some of the other stuff, and then we'll dive into everything else?
You know what? Do that. I'm going to go grab some hardware devices so that I can teach you how to safely custody your Bitcoin.
Perfect.
I'll be back.
So, as P mentioned, the powers that be are finishing up their meeting. They started meeting yesterday. They will be finishing it up today. All expectations sit at a 75 basis point hike. This is as of 2 days ago, a very, very drastic and sharp change. This would be the highest rate hike in 41 years. I mean,
wait, say that again. This will be the highest rate hike in 41 years.
Yeah. And
that's
on just a one-stop rate hike.
I never knew that. Like, because obviously they went up over time. I didn't realize that this would be like the single highest hike. That's wild.
I mean,
keep going. Sorry, I didn't mean to interrupt you.
No, you're fine. I think Volcker had bigger hikes. I think he had like a whole % or two. So like, don't misinterpret the weird ESPN statistic that I just threw out at you, like the very specific statistic.
That makes sense for the 70s though, but they had more room to go because of how much debt they had compared to everything. But that's very interesting. I didn't know it's been 41 years since we've done a hike this big, which isn't even that big. Like 50 basis points or 75 basis points isn't that much in my opinion.
It's not until you pause for a moment and you realize we went from 3 months ago, 0% to a 25 basis point hike. And then 6 weeks after that, we doubled that. And then we had our first 50 basis point hike in almost 20 years. It wasn't since the dot-com bubble time. And then yet again, we are further increasing the amount we're hiking. And what's really, really important here, we are increasing at an exponential rate, and it's fucking terrifying because you went from having just 0 to 25, and then you doubled what your rate is for how much you wanted to raise the rate, and you raised it by 50 basis points. So now you had a 0.75 interest rate, and then now they're raising it 0.75. Like, this is insane.
Hey, did you know this? Have you heard this? That in Q, say it again, the fact.
If we do get a 75 point basis hike today, this will be the highest rate hike in 41 years.
Holy shit, I had no idea.
Yeah, this is
That's what I said. I had no idea.
Like, there's a lot of conversation going on Twitter last night about raise it 100 basis points, like wreck the market, do 200 basis points. And I don't think people realize what could happen. Like, you think it's bad that Bitcoin dropped down to where it's at now? Just wait if Jerome Powell actually raises it 150 basis points. Like, I don't care what anyone else says. The reason why Bitcoin trades like in tandem with the NASDAQ is because it's treated like a risk-on asset by private fund managers. And they are dumping Bitcoin and buying Bitcoin the same way they are dumping and buying tech stocks. So what happens when rates increase? Tech and growth stocks get dumped. What else is going to get dumped in that bucket is Bitcoin. So the market is now expecting a 75 basis point hike. The last time the market got what it wanted, we got our dead cat bounce little bull run. We're seeing today the stock market's up a whole percent. I sent a tweet out about this. It is complete bullshit. You have a whole percent increase in the S&P. I believe you have like 1.5% on the NASDAQ on 10% less volume than yesterday. That is like the clearest sign of a pump fake, that there is no actual buying going on, that there aren't enough bulls to sustain this price. And this is literally a bull trap. But that's just my 2 cents as someone who's traded and charted the stock market for over 10 years.
We'll see what happens. But I agree. I also do not want to head into chaos and have to eat my own non-existent children, which I think will happen if we crash the markets in the wrong way.
I also really quickly want to just mention to everyone who is watching on Twitch, LinkedIn, Facebook. Are there any other platforms? All these platforms, YouTube as well, Rumble. We see all of the comments. If you guys have any questions you want to ask us or have us ask Tom Luongo, who will be our special guest in just about 15 minutes, feel free to post them in the chat box, and we do see all these questions.
Let's dive in.
Let's dive in. So, helping my dumbass get these Bitcoin off of exchanges. First things first, if you have Bitcoin off exchange, get it the fuck off right now. Excuse my language, Kingston. But be sure to also, on a secondary note, know where you are sending the Bitcoin. And I don't mean like make sure the address you punched in was right. Like, make sure you are the one holding it. We're seeing Celsius, which promised people, we got you. I got you, bro. Don't got you, bro. They really don't got you. So, Chris, help my smooth brainness move this Bitcoin that I just found on an exchange to an appropriate wallet. I was Googling some stuff, hot wallet, cold wallet, like the fuck. Yeah, like what is the difference?
Yeah, absolutely. So I'll start by saying that, I think it's easy for people to learn about Bitcoin and then feel a sense of kind of overwhelm when they start trying to understand what it actually means to own Bitcoin, or in Bitcoin, as we say, hold your own keys. And the really powerful thing about Bitcoin is that it is a bearer asset, right? You used to have, back in the day, you had gold, as an example, which was fantastic at taking money or translating value, I should say, across time, because it would maintain its value. But it was terrible at taking your value across space. Gold is very heavy. You have to pay a lot of costs in order to secure gold. You have to pay for guards, all that kind of shit. Although it's fairly dense, it's hard to carry around with you. Then you had, fiat currencies or paper-based currencies. There was, currency that was backed by gold originally, and that was really good at translating value across space. Paper money, fiat money, is very, very easily transported. Okay, but it tends to be very poor at translating your value across time, as centralized entities control the production of fiat, in this example, paper-based currencies. The incentives are so strong that they tend to devalue that fiat over time. And Bitcoin, one of the reasons that it's such a powerful innovation is because it allows you to transport value across time and space. It is a digital form of value storage, which is really, really novel, and that takes a little bit of getting used to. So, there's this news with Celsius that just happened. Essentially, they have frozen withdrawals for their users. And the way that Celsius has everything set up is basically the people that have invested in them is the wrong word. When you put money in an exchange like Celsius, this is not necessarily all exchanges, but they then lend your Bitcoin out to others. And the way that it was set up is that basically if something bad happened, the people that they lent that Bitcoin to have preferential treatment above all of us. So that they get made whole before all the retail customers do. So they've frozen all their withdrawals, and there's going to be proceedings, probably bankruptcy proceedings. But the people that have their Bitcoin stored at Celsius are probably never going to get made whole entirely. They're going to get a percentage of their Bitcoin if they're very lucky, and it's going to take a long time. So today what we're talking about is the importance of holding your own keys. In Bitcoin, we talk about not your keys, not your coins. We're going to go through what that means and the things to consider as you go through the process of buying Bitcoin on an exchange, potentially taking it into a mobile wallet where you are actually holding your own keys, but it's on a device that's connected to the internet, to having those private keys stored on a purpose-built hardware device, which is extremely secure. So, again, if you don't, well, actually, let me take a step back. Bitcoin uses public and private key cryptography to secure transactions. A private key is created when you make a Bitcoin wallet, and the wallet creates public keys that are then hashed and used as addresses for receiving Bitcoin. So when somebody wants to send you Bitcoin, you give them an address, which is a hash of a public key. And then if you want to later spend that Bitcoin or send it somewhere else, you have to use what's called a private key that only you should have access to. So when you buy Bitcoin on an exchange, what you're doing is you're actually getting an IOU. You're trusting the exchange to give you the Bitcoin that their records that you don't have control over say that you have access to. And as we've seen with Celsius, that can be a very, very risky proposition. So Bitcoin is about radical personal financial responsibility, and one should embrace that and take custody of those keys. So there's a lot of ways to do that. It's a process, right? So when one buys, and by the way, Q, Chris, please feel free to jump in, interrupt me if you have clarifications, if I start wandering down some weedy pathway, and bring us back on track. But essentially, you may have heard the terms hot wallet, cold wallet, mobile wallet, exchange. We're going to talk about what those are. Again, an exchange is where you might use USD or fiat of some other currency to buy Bitcoin. And when it's on the exchange, as I said a second ago, you're trusting them to give it to you when you want it. Okay. So how do you move from that to a more secure way of storing your Bitcoin? What a lot of people do is they will start by having a wallet that is on their phone. So it's a mobile wallet. Now, in those types of systems, you will have, you control your own private keys. So if you're using something like Blue Wallet or Moon Wallet, which is MUUN, both great options. There's many other ones. Your phone is storing that private key, which allows you to spend that Bitcoin later. And that is much more effective and secure than storing that Bitcoin on an exchange, as I just said. The problem there is that mobile device is connected directly to the internet. So there is a long history of people trying to hack those types of devices, whether it's on your phone or stored on your computer, right? You can also use a desktop wallet where you're storing those private keys on your computer as well, okay? So when you're doing that, because those devices are connected to the internet, they are potential attack vectors to your Bitcoin. People can try to hack them. They can do exploits. There's all sorts of ways, which you don't have time to go into here, to basically try to get access to those private keys so that they can control your Bitcoin. Q,
yeah.
Chris?
I'll add one thing, just real quick. And I think that's really important, the nuance between a hot wallet and a cold wallet, like you're bringing up. People think, oh, it doesn't happen. It does. I was at a conference this past weekend, and it didn't happen there. But the guy was saying in his talk that he's been SIM swapped twice. So not to go into it, but basically a SIM swap is if they take the SIM card out of your phone and replace it with their own, and then basically you think you're using your phone, but you're really sending it to them. But there's more advanced methods where they can hack in quite literally by using a device that, like, when you hear of the credit card companies that, like, if they're not in a Faraday bag or some type of thing, they can pull the information off. There's now, like, they use basically radars to, like, aim a device at a phone, and they can pull it off. We don't need to get into the details of that, but to P's point, it is not as secure as a device that is offline.
Yeah, and to be clear, nobody has to actually take your SIM card out. It can be just done, basically digitally. Yeah. They can do phishing attacks, all sorts of social engineering. So anyway, the goal is, so you buy Bitcoin, you then getting it off the exchange, as we were saying. The first step to that would be transferring it to a mobile wallet on your phone. And you want to make sure that you're using an app that is, like, well established, well respected, that multiple sources have said is secure, and that it should be open source, okay? Because you want people to have reviewed this software and established that, as far as the community can tell, there aren't any exploits that are available there. So again, apps like Moon Wallet, MUUN, Blue Wallet. There's a bunch of other ones, but make sure that it is a well-known wallet. So let's say you buy some Bitcoin on Cash App. Great way to do that. That is essentially an exchange. They are holding your private keys. Then from Cash App, you send it to a mobile wallet, right? Like Moon Wallet, MUUN. And I say that every time because it sounds like it's MOON. That's a different thing. So at that point, you are holding your own private keys, but again, the device itself is storing them. So that is that creates a large attack surface. You don't want that. So, but it's reasonable to do that if it's sort of like just like spending money, right? I have a hot wallet on my phone, and I keep a very small amount of Bitcoin on there so that when I'm out getting drinks with friends, I can repay them very easily, and that's fine. But once you start storing a moderate amount of Bitcoin, and that's different for each person, then you need to start thinking about more secure options. And this is where we talk about hot wallets or cold wallets. A hot wallet is any application that stores your private keys and is connected to the internet or has been connected to the internet, okay? I'll say that again. A hot wallet is any device or piece of software that is storing your private keys and is connected to the internet or has been connected to the internet, right? So a cold wallet is a device that has never been connected to the internet and does not connect to the internet, okay? It's a purpose-built device that is designed for security and has been, penetration tested and does one thing and one thing extremely well, and that is store your private keys. So the transition would be, if you buy your Bitcoin on an exchange, you might transfer it to a mobile wallet, and then once you have a moderate amount, you might decide to transfer it to a cold wallet. I'm going to go through some examples of what cold wallets are and what they look like, okay? So the most popular cold wallet, which is my personal favorite, and I recommend to everyone, is the Cold Card, okay? This is produced by CoinKite. It looks like a little calculator. There's a ton of incredible tutorials written about it. The MK3, which is the sort of previous model, is still a great option. There's a new one that just came out, the MK4. But this is a very, very well-designed Bitcoin-only hardware wallet that is optimized for security over ease of use. And that's really what we're talking about here. It's a broad spectrum, and on one side you have ease of use, and on the other side you have security. So another example of a cold wallet is the Ledger Nano S. This is a very popular one. Okay, Trezor has another one that's really popular. Okay, and then another one that is one of my personal favorites is Bitbox 02 Bitcoin Only Edition. But again, you don't have to use these ones that I'm specifically mentioning, as long as it is a well-known brand that has a long history of effectively securing Bitcoin private keys, and that you can sort of get access to that thing in a secure way. What do I mean by that? Don't ever accept a hardware device that somebody just off the street gives you. The reason is because they are incentivized to basically install something potentially on that hardware device, or some way of eventually later getting access to your Bitcoin. So you'll notice that this comes in a like super intense looking bag. This is a tamper resistant bag. And there's all these special security measures that are in place to make sure that you can, you have a better chance of this not having been tampered with in transit to you. Another thing is, side note, you should always buy hardware devices directly from the manufacturer. Don't buy them from a third-party exchange that is, or a third-party person who's like, oh yeah, on Craigslist I got this thing, or some random website. Always buy it directly from the manufacturer. Bitbox 02 also has this like crazy tamper-resistant packaging for the same reason.
I want to really quickly just jump in here, Pete, and just let everyone know we are not sponsored by any of these companies. These are companies that we ourselves use and like. Yes. So I want to really emphasize that point, because I know this reads like an ad, but it is not meant to be.
That is a great point. I literally have these because I set up multi-sig wallets, which we're going to talk about in a second, for friends and family. So no sponsorship. These are all devices that I purchased with my own money. I'm only going through them because I use them personally. But there's a lot of great options out there. Just make sure that you do your homework. Do not take what I have said here as like absolute truth. There are a ton of articles out there. Do not trust me. Verify with your own eyes and information. That's really important.
P, really quickly, I want to take a question from the audience. The tutorial on our page, the Tails OS BTC wallet, is that a cold wallet?
The Tails OS BTC wallet. No, that would be a type of hot wallet. Tails OS is a specific, I believe it's a Linux distribution that is optimized for privacy. But if you are, actually, it would be, you could, in theory, try to set that up as a cold wallet, but you shouldn't consider that a cold wallet, because in order to establish that, you're going to have to connect it to the internet. So ideally what you're doing is you're using a purpose-built device that is just for storing your private keys.
And even if you want to go one step further, that's Bitcoin only. Some of the devices that P mentioned, they have optionality to do non-Bitcoin things. While we would recommend not doing that, if you have alt or whatever, you want to do your own thing, but we are Bitcoin only. Some of those devices, people think that even though they may be secure, they could be compromised by you're adding more attack vectors by adding other coins to it. Yeah. So Bitcoin only devices are what we go to, and that's what I would recommend to everyone.
Absolutely, because the more things, the more functionality that a device has, like your laptop, which can do a million different things, the more software that can be installed on them, the more ways there are potentially for people to engineer ways of basically stealing your private keys and thus stealing your Bitcoin. I'm realizing we're totally out of time, aren't we?
We are. I want to give you the chance to like a quick tip. I want to remind everyone who's watching, smash that like button. We're going to be very, very liberal with sats drops today. So likes, rumbles, share. Let's get this audience number pumping up a little bit so that you guys can get some more rewards.
All right. Want to apologize. This is something I think about a lot and I get super excited about. So if I've gone into too much detail and it feels overwhelming, bottom line is not your keys, not your coin. I'm going to recommend some articles which you should read. You should also do your own homework. There is a fantastic article that is written by, I don't actually know the author, but it's on Swan Bitcoin. If you go to swanbitcoin.com/wallets, they do a really good job of giving a high-level overview of when it is appropriate to move from a mobile wallet to a wallet that you're having on your computer, and then to a cold storage solution. We didn't even talk about multi-sig setups, but a multi-signature setup is where you have multiple different hardware devices, and then basically you have to use all of them in order to make a transaction and move or spend that Bitcoin. So that's like maximum security. You distribute them geographically. There's all these different things. There's also great options if you want to do that with third-party services like Unchained Capital or Casa. Again, go read the article by Swan Bitcoin, not a sponsor, swanbitcoin.com/wallets. It's a good one. They have a lot of great content there. There's many others that you can check out. But really what I wanted to communicate here is take your Bitcoin off exchanges, learn how to custody your own Bitcoin, and understand that Bitcoin is about radical personal responsibility. And one of the things that is the most important that you can take responsibility for is how you store your value. In a world where the amount of money that is being printed is inflating away the value of fiat currencies just at an astronomical rate, Bitcoin represents a way for you to take control back from these centralized entities which do not and never have had your personal best interests at heart.
Love that. We're going to drop some sats in the chats right now. Let's go to a commercial break, and we're going to be joined by Tom Luongo for our interview today.
Yep.
What is up, guys? Thank you for sticking around through those commercials. And we are joined by our special guest today. He has been on Bitcoin Magazine Live, however, never talking to us. Ansel and FedWatch have kept him to ourselves, but we finally got Tom Luongo to join us honestly, the day couldn't have been better. Tom, how are you doing?
I'm doing great, guys. Thank you for having me. I hope everybody's enjoying Fed Day.
Exactly. I didn't realize when I had planned this out to have you come join us that not only would this be for our 100th episode of Bitcoin Magazine Live, but it would also be the most important FOMC meeting. And I feel like that jackass who does this is the most important election of our life. This is the most important FOMC meeting of our life. But it really feels like it is.
It really does, doesn't it? I'm not going to argue with you about that. The more I think about it, certainly I think actually it was the most important ECB meeting of all time last week. All right. And I know we're going to get into that today because that's kind of my thing, right? Is, making fun of the ECB. So, because at this point I'm like, I don't know about you guys, but this morning I was up late last night, right? I couldn't sleep, and it was 3 o'clock rolled around. So the new episode of the very mediocre Obi-Wan series dropped. So I watched that. And as I got done watching that, I was checking the markets. What's that?
Whoa. Terrible take. Terrible take out the gate. I'm going to spoiler alert, but Darth Vader v. Obi-Wan Kenobi.
It was the better episode than the previous 4. But look, Obi-Wan's my favorite character. They're not doing him justice. I'm sorry. I want to like this series. I do, but I don't want to.
I know he's so washed up.
So there we are.
But that's what they're trying to do. All right. Tom, we're going to talk about Obi-Wan off air.
Absolutely. We can do that. That's fine. We can do that later. That's fine. I'll have you on the podcast. We'll do it on my podcast.
I'm so down.
All right,
Let's do
so
it.
we'll do it. All right, so we'll talk about this after the show. But there I am, 4:00 in the morning, and before I go to bed, I'm like looking at the markets, and what do I see? I see ECB meets for emergency meeting this morning, and I literally couldn't go to sleep for another 15 minutes because I was cackling so hard. Because everything that's happened since the ECB meeting on Thursday, and then the CPI print on Friday, and now the market finally coming to me saying, oh yeah, really? The Fed might raise 75 basis points. We're doing this like 20 minutes before the Fed does their thing. So we're going to get the announcement from the Fed while we're doing this live. It'll actually be kind of interesting. And I think the markets have all now priced in 75 basis points, which, honestly, I thought would be Powell kind of looking at Biden last week when he showed up at the White House going, dude, screw with me. And I go 75. Obama, look at me sideways and I go 100. Like, that's the way I thought that meeting went down. And I'll be honest.
Interesting.
So now, then the CPI print comes out and the markets all start reacting like, oh my God, the Fed's not in control of this. And the Fed's not going to pivot anytime soon. We got a worse CPI print than we were expecting. So all these Keynesians are like, oh my God, we have to raise, the Fed's really behind the curve. We're going to have to raise rates faster. I'm like, okay, yeah, whatever. I'm like, dude, this is not about inflation at this point. It's cost push inflation. Cost push inflation has no, monetary policy has no real effect on cost push inflation other than to do dramatic demand destruction at very high interest rates.
What are the types of, what are the types of inflation?
I'm sorry?
What are the type? No, I mumbled. What are the different types of inflation?
There's two basic types of inflation. There's cost push and demand pull. And Keynesians only ever want to talk about demand pull, and central banks only ever want to talk about demand pull, and politicians only ever want to talk about demand pull because they always want to paint the picture of, we've done such a great job managing the economy that everything is demanding that we pull prices higher because there's so much demand for all of the stuff, wages, labor, commodities, oil, gas, all the rest of it, dogs and cats living in harmony, everything's great. Let's move into the future together. That's their story. They never want to see the other side of it. Whenever cost push inflation happens, which happens during stagflationary depressions like we had in the 1970s, okay, when we have something like that, they never want to admit it until it's way too late. And when they finally do admit it, they're like, well, we can still control it. Like, really? And how are you going to control it? Oh, well, we're going to raise interest rates to 20%. Oh, really? So you're going to do that with the core economy of the world. What do you think is going to happen to the rest of the world economy if the Fed goes to 20% interest rates, which it's not going to do, by the way. Even I'm not that crazy. Because it's not going to happen. Like, Vietnam can go to 20% interest rates when they have cost push inflation. We can't. Okay, not anymore. So cost push inflation happens when you don't have enough supply. And now everybody who has all this money is running around desperately trying to get all the stuff that they need. And that's pushing prices higher. So everybody needs oil because the demand for oil is relatively inelastic. The demand for food is relatively inelastic. Hell, even the demand for cigarettes is relatively inelastic, right? So, if there's X amount of oil and everybody needs it, well, then there we go. So, that's what cost push inflation is, and that's where we are. And the Fed is, and for the most part, Fed's tools and central bank tools in general just aren't designed for that. I wish they were, but they're not. Well, no, actually, I don't wish they were because I'm ultimately an Austrian and, a Bitcoin guy, and I believe in hard money and all the rest of it. So there you go. So, yeah, that's where we are right now. So we're just waiting for the Fed to. So then the question I have to ask, or when you say that, so if I posit something like this, right? I say, okay, if the Fed's not raising rates to tame inflation, because I don't think they are, then what are they doing? That's the big question. Now, I think I have an answer to that, but I, throw it up to you guys before we go any further, and I just filibuster for the next half an hour, which I'm perfectly capable of doing, right? So I'm just trying to be great.
I'm kind of curious what your thoughts are on entertain where my brain is going to take this.
Sure.
So we saw, in my opinion, a pump fake. We saw inflation top out, decline, and then we got this new reading that made a new all-time high, and everyone, as you mentioned, is in a panic, thinking the Fed doesn't really get or know what's going on. I actually am going to take the other side of that argument and say not only does the Fed know what they're doing, when they were saying that that inflation is transitory, they weren't saying that because they just thought the prices would eventually go down. They knew they would have to force a recession. And in turn, by forcing the recession, you created this deflationary period to create the illusion of transitory inflation, when in fact, all you're doing is just pressing pause and reintroducing it at a later date, inevitably. Maybe I'm giving Powell and the Fed too much credit there.
How about I run this one by you instead? That's not a bad idea. It's not bad, but I'm going to run a kind of simpler one in front of you. Powell started, and if you guys are fans of mine, then you know that what I've been saying for the last year, which is that Powell started tightening last year when he raised the reverse repo rate, payout rate by 5 basis points, gutting the euro, changing, overnight, the market's changed. Like all of a sudden, that was it. We're now in a euro bear market. And the standing balance on the reverse repo facility at the U.S. Fed started rising rapidly. Had been rising before that, was up to 450 billion, but by the end of the summer we were 1.7 trillion. Today we're like 2.1 trillion. But how about this one for you? The better scenario is to think about, once the Fed started doing that, what was the political reaction on Capitol Hill, right? Well, the political reaction on Capitol Hill was, oh my God, you're going to kill our big agenda, which is to destroy the U.S. dollar and destroy America because we have all these spending plans and we want to push through, umpteen $1 trillion worth of spending, which, oh, by the way, you, Jerome Powell and Federal Reserve, are going to have to monetize because no one else wants this garbage. So now what, right? So when you put it like that, you have to ask yourself, Powell, who hasn't been reconfirmed as Fed chair, right, is in a very tenuous political position. So he talks out of both sides of his mouth about inflation, knowing full well that real inflation is coming down the pike by the end of the year. He just has to stall the political process as much as possible. Now, he can only do so much. The bigger question is anybody else his ally? And this has been my thesis for a while now, because the argument you have to have then is, well, okay, what other allies do you have to have in order to pull this off? Well, the other allies you have to have are the people who are the shareholders and the most powerful of the 12 regional central banks or member banks of the Fed, the New York Fed. And those are the guys who were standing behind Kirsten Sinema and Joe Manchin, who said no to Build Back Better, who said no to the full-blown infrastructure bill, and said no to raising the debt ceiling, and basically told Nancy Pelosi, no, you're not getting any of this. And we're gonna just run the clock out on you until inflation starts to happen and the argument for all of the spending evaporates. Because, hey, the economy is improving, like unemployment's 4% and inflation is rising, and all the classic Keynesian arguments of we have demand pull inflation is happening now because we're coming out of COVID. Omicron comes out. It's not really all that deadly. I had it a couple of weeks ago. It was annoying and it sapped my energy for 2 weeks. But, other than that, I'm back to, the prickly self that I was 2 weeks ago. Everything's good again. So now the question is, when you're looking at that, now you're just trying to figure out how does Powell navigate the waters in Washington, D.C. in order to get to a confirmation date? And what allies what changed politically to allow for the Fed to retain its independence from the Treasury Department and Congress, and for Powell to survive? And all of those things fell into place. They tried an insider trading scandal against the Fed. Didn't work. They got 3 Fed governors, Kaplan, Kurita, and Rosengren, but they didn't get Powell. They tried to get Powell. They didn't get him. What happens? Then they had to go through 3 Senate confirmation hearings to replace those people before they can reconfirm Powell. Eventually, so they put up, Sarah Bloom Raskin and all these freaking commies, and it's horrible. But once that's all done, Powell's got to get reconfirmed because he's got the votes in the Senate. And once that happens, he's now free to do whatever he wants. And that's why I said at the beginning of this, when he went to the meeting with Biden, when he was summoned to the White House, like, yeah, all right. So Fungal Joe and his junta of the Biden administration are going to summon the Federal Reserve chair, who now has, basically bomb-proof armor for the next 4 years to do whatever the hell he wants. That conversation was really short. Dude, we're raising 50 basis points. You get in my way and I'll raise 75. You look at me cross-eyed and I'll go 100. It's that simple. Like, this is what we're doing. because you people are traders and you don't work for the United States. You work for Europe. And we're going to break Europe because Europe wants to destroy the commercial banking sector here in the United States. And that's the story. And it's not much more complicated than that. And and there have been other market analysts trying to tell you this, right? I'm not the only one saying that. I'm just the first one I'm the one freest to say it. Like people like Danielle DeMartino Booth can't say this stuff, right? But she knows what's going on, but they can't say it. Jamie Dimon, the CEO of JP Morgan Chase, can't say this stuff. It's too inflammatory. But I can say it because I'm just some guy with a website who shows up on Zero Hedge, and everybody reads. And now the world is beginning to see the totality of the story. But you got to understand that, nothing exists in a vacuum here. Like none of these markets exist in a vacuum. The politics doesn't exist in a vacuum. All these decisions are made in a kind of move, counter move thing. And you've got to be willing to constantly shift your focus away from not just capital markets, but the political scene, the geopolitics, and all the rest of it. And if you just identify the key players and see how they're reacting in real time to the incentives, and you can see what's happening next. Like the Fed is not going to turn all of its power over to Klaus Schwab. It's just not happening.
What?
And Christine Lagarde.
He is literally Satan, so it seems like it'd be a.
What are things that you do to separate the noise from the actual signal? Because some of these leaders will say something because that's what the messaging that they need to get out, when in actuality, all of their actions point the other way. We saw Bernanke talk about how the job of Fed chief is 98% just posturing and talking, and then 2% is done off what you actually do. Right. So how are you separating those things?
Can I jump in?
Excuse me. It's a great question. Signal to noise ratio is something that I talk about all the time, being a former chemist and certainly being a former analytic chemist, and who has learned more and forgotten more about actual honest to God everyday signal to noise ratio of instruments than most people have ever studied in their life. And so that training has really helped me well over the years. It's what's important, I think, and I'm not busting my hand, patting myself in the back or anything. I literally have been trained for 30 years, to do this in some ways, right? The key is being smart and understanding what the big story of the day is, and then realizing how everything fits into the big story of the day. We all talk about the Overton window, right? The Overton window is important, but the old Overton window sometimes is a big distraction. Understand that at this point in time, everything is about how Davos creates the Great Reset. Everything is about that. And what you then have to do is just say, okay, everybody start with the basic premise. Everybody who acts or says in a particular way that supports that process, they're with Team Davos. And everybody who doesn't do that is not on Team Davos. We'll start there. And then the question is, and you start with your assumptions. And I always assumed that the Fed was part of all of this until last June, literally tomorrow, a year tomorrow, right? Today's the 15th, tomorrow's the 16th. And as far as I'm concerned, June 16th should be remembered as the day the Fed declared independence, and ended the coordinated central bank cartel global monetary policy, the coordinated central bank standard that we've had since the fall of Lehman Brothers, or really since the announcement of the central bank slush fund, which broke the gold market in September of 2011. Really, that was the beginning of the current monetary system, and it's the broken one we have today. So separating signal to noise is understanding who the major players are, and then just mapping who works for whom and who's part of the various factions, and then see who if anybody switches sides, because that happens. And I think I'm dead serious when I say I don't think Jamie Dimon is on Davos' side anymore. I think he was, and then I think they told him that they were going to take JP Morgan away from him, and he said no. and that was that. And at that point, it's Germany versus Greece again, because Diamond is Greek and Klaus Schwab is German, and old enmities and old hatreds just bubble to the surface. And there ain't no love lost between Germans and Greeks, by the way. I mean, this is the problem with Europe as a concept, that the United States of Europe, which is really the EU-SSR, is a fallacy. There's 35 cultures. There's how many different languages? These people don't really like each other, and you all want to be under one economic and political rubric? What are you, out of your minds? What am I, 12? You think this is going to work? It's just dumb. It's just so dumb. So I don't know.
One thing I was going to ask is, Q had asked to sort of signal to noise ratio and how you think about that.
Right.
This wasn't always the case, right? Like there was didn't it used to be that basically they would come out and they'd be like, here's what's happening, here's your information. And what was the timeline of us transitioning to this period where there's the hinting, the signaling that we're hinting, the 4D chess machinations of if I say this and then I actually do this, it's going to have this effect and then the market will react?
It started once the markets broke in 2008, right? And we entered the period where the central banks were literally keeping the economies from imploding. And so now everything became a 3-layered effect. Well, when inflation is high, when we get a bad CPI print, we're supposed to think, X, right? But no, we have to think of the third order effect of X, because our markets are so cocked up and everything is so mispriced that we have to think, well, bad is good as bad, right? You almost do the zero hedge is really good at this. Like they're really good. The Tylers over at Zero Hedge are really good at going, oh, by the way, because of a bad CPI print, that means the Fed now has to raise by 75 basis points when everybody had more price in 50. Whereas, okay, well, that's a first order effect that everybody understands now. But think about times past when, say, the labor market came in hot or consumer spending came in under, and then all of a sudden you see these weird movements well, why is consumer spending coming in cold? Why are we seeing the stock market rise? Oh, that's because everybody thinks now the Fed is going to turn around and extend QE, or they're going to add to QE, and that's going to bump the stock market price higher. And so everybody's trying to front run what they think the trade's going to be. We're just living in this world where everything is unmoored from fundamentals to the point where everything is about the central banks. When in the past, say previous to 2008, we cared about what the Fed chairman said. And Alan Greenspan was the master of putting out thousands and thousands of words, which said nothing. He was almost like he was, James Joyce or something. It was pretty impressive, actually. And then would just do what he was going to do and bamboozle Congress. But once Bernanke decided to save the markets, decided to save not just the markets, but the banks and the central banks, setting up this coordinated central bank policy, which was always going to lead to the ruination of all of the individual central banks, to roll all the wealth up to eventually to the IMF and the BIS, and to destroy the commercial banking system by turning them all into zombies. And that's what it did. It turned all of Europe. Mario Draghi turned the entirety of the European banking system, the oldest banking system in the world, into a bunch of zombie banks, which are now today, they're running out of, they've run out of the brains that they've eaten previously, and now they can't even walk and try to get to more brains. They're done. And you've got, the Fed on one side and the Russians on the other, just tearing Europe apart. They're not even there. It's kind of funny, actually. So that's what I think is happening.
Well said.
I accidentally posted a spoiler in our company chat. We are about 4 or 5 minutes away from having the actual announcement come out. The press release will follow 30 minutes after the announcement actually comes out. How much weight do you put on the market sentiment shifting from 50 to 75 basis points on the announcement of this inflation number from Friday versus anything else?
A lot, actually. I think, one of the things that I've been talking about for a while now, or at least it's hard. I speak in a lot of different forums. I speak on go on a lot of different podcasts, produce stupid amounts of content for my patrons and whatnot. I can never remember where I say everything, right? I try to keep the message as simple as possible, or at least down to the four or five major points. But one of the big ones is bull markets always climb a wall of worry, right? We've heard this many, many times, right? Well, bull markets come in all shapes and sizes. They come in the form of confidence. They come in the form of, confidence in an institution. Once confidence in an institution is lost, it's got to climb a wall of worry to get its credibility back. Well, that's where the Fed is today. And nothing is official until it's been officially denied. And Powell has denied that the Fed has lost its credibility. So think about where we were a couple of months ago. Before the Fed even raised interest rates, everybody was talking about when the Fed was going to pivot, right? The Fed hadn't even raised rates yet, and everybody was talking about, how many were they going to be able to get away with before they would have to stop? I'm like, you're reading the room wrong, guys. The Fed's not raising rates to stop inflation. The Fed doesn't care about the stock market. The Fed doesn't care about any of those things. The Fed is under existential threat from a bunch of European communists. So now, when you think about what happened, once you understand that, then I could see the trajectory of what the Fed was going to do this year, which was that, I could see 25 basis points every meeting starting in March until we got to the end of the year. And then things got out of control faster. And then Europe started to implode quicker. And then the Russians put more pressure on Europe than anybody ever thought. And then inflation keeps coming in hotter as the Biden administration keeps doubling down on inflationary things that will cause even more cost-push inflation. Like they're destroying the energy sector here in the United States, and they're doing it on purpose. They're vandals. They're doing it on purpose. And that's just feeding the Fed, giving the Fed every reason to raise faster. And I've been saying, like, okay, we're looking at 50 basis points for at least 4 meetings, if not 5. And then the CPI comes out, and it's worse than everybody expected. And all of a sudden, with each one of these moves, these events that occur, you pull another tranche of people out of the Fed can't possibly raise 3 times. They can't possibly go to 1% or 1.5%. That would crash the markets. And then they go, holy Christ, the Fed just raised to 1.5. They went to 1.75 this week. Now what? I guess they're serious. And all of a sudden, we go from 1% of the population, of the investing population, thinks the Fed is serious about going to 2 or 3%, to 5%, to 10%, to 15%, to 20%, and on and on and on. And when you map markets and you map sentiment that way, then you can see how markets are going to move. So a whole lot of people got red-pilled on Friday. The Fed's serious. They're not screwing around here. The Fed's got plenty of room to raise rates. So to me, I think it's pretty obvious what's going on. All right. So that's what that was I think it was a big tranche. It's probably, 10% of the population, maybe 15. It's big.
We are moments away from the official announcement coming out. I think there's something very, very interesting, Tom, that you're alluding to, and that is the majority of investors in the public markets right now do not believe the Fed is going to have the cojones to go up that high. And what happens when people who have a bullish outlook have to shift to bearish, we're not done with this selling pressure. No. So I'm not asking for necessarily a bottom.
Sure.
But I'm curious of, we're hovering at 11,000 on the NASDAQ. Mm-hmm. We could very well see a break below the 10,000 psychological level.
Easy.
Is there a support level that you're paying attention to right now in particular that you're like, this is dangerous if we break below this level?
I don't really look at the NASDAQ and I don't look at the S&P 500 because I'm always focused on global capital flow, right? And the Dow is the measure of global capital flow into the United States, offshore capital flow into the United States. And for that reason, and this is not a unique idea or anything. I learned this from Martin Armstrong, who taught it to me, and now I'm using it as my key indicator. And I'll always give Martin credit whenever I think, somebody, and I'll give everybody credit whenever I'm
going to interrupt you right now. I'm so sorry, Tom. We officially got a 75 basis point hike.
No surprise. The LIBOR markets were telling us that last night. by the way. So good.
Holy shit.
I'm actually good. I'm actually happy that the Fed did this because, again, not just because it makes me look good, right? I mean, I don't care about me. It's that this is what the Fed needs to do. Look, humanity's future rests in the balance of the Federal Reserve breaking the back of Europe, okay? And doing away with these German eugenicists and these horrible people over at the World Economic Forum and their attendants and their quislings from destroying global capitalism. The vestiges, we don't even have vestiges of capitalism around the world today, right? The Chinese aren't doing more danger, as the Communist Party of China isn't doing more damage to global capitalism than Europe is doing right now. Okay? I'm dead serious when I say this. And I mean this sincerely as the most radical of anarcho-capitalist, libertarian, non-aggression principle wielding bastards you'll ever meet in your entire life. I believe this to the core of my being. Those people are communists. They need to be beaten. And the best way to beat them is for the Fed to pull back on all of their liquidity and take away their ability to create offshore dollars and have control over the Fed's monetary policy. When the Fed turns around and says, we're raising 75 basis points, what do you think the ECB's got to do now? And the ECB can't do this. Okay. What are they going to do? They're not, Lagarde's not going to have to wait until September to raise a quarter point. Like, she's going to have a meeting next week and raise half a point. It's going to be beautiful. And then the euro is going to collapse and European sovereign debt's going to collapse and all that money is going to flow into the United States. So back to your question about where I watch, what I'm watching for is 29 grand on the Dow. Horizontal support on the Dow is right around 29,000. And, you know, we're sitting, what do we open today at 30,800, 1,800 points? I mean, I don't have anything open because I'm always bandwidth constrained. So I don't even have a ticker open while I do one of these. I have no idea what's happening.
We opened at 30,400 or 30,300 in that range.
Well, and we're down 500 points today. Okay.
Yeah.
And I've been busy all morning trying to get stuff out the door. So I haven't even gotten a market quote in like 3 hours.
No, Tom, we're up today. Markets are up. Markets are up. Volume is down. But the Dow is the smallest one, and it's as of right now up 0.96. I mean, look, already down to 0.62. I think the moment Powell gets on that stage, things are going to shift very quickly.
Yeah, the markets are up this morning. Okay, that's fine. Yeah, I've just been so busy this morning that I haven't even, since 9:30. I haven't even had a chance to look at the market. So yeah, all right. So the Dow right now is up 60 points. I finally opened up investing.com. I'm mostly interested in the euro. The euros is threatening a breakdown below 1.339, $3.39. The pound is threatening a break of $1.20. It's just all beautiful. But the big one is the 10-year. The 10-year is at 3.4%. And the German 10-year is at, where is it? 1.64%. So, but that market's closed. What I said to my patrons this morning is I do a podcast for my patrons on Wednesdays and Sundays. I said this morning is that the only thing that's going to save the ECB today is that the European bond markets are already closed when Powell comes out with 75 basis points. So I'm like, I can't wait. I think I'm staying up till 3:00 this morning when I get home, just because I want to watch the German Open, so I can watch the German bond market explode. So I can literal I mean, this is financial Schadenfreude, like you wouldn't believe. Nothing makes me cackle more than watching the euro get crushed. I hate to say it, but there isn't a stand-up comedian today who's funnier than watching European debt markets right now. That's the funniest shit on the market right now. I'm sorry.
Go watch the Ricky Gervais. Go watch the Ricky Gervais special on Netflix.
Okay. Is it good?
But it's
can
really
you elaborate though? Just for as Q would say, the smooth brains like myself who don't track these things at the resolution that you do. What about that? Can you just say again, why is that sort of this novel tragedy that's playing out, comedic tragedy?
It's just, I've been calling this for so long. I've been saying that Europe is just in trouble for so long, and people have been bamboozled by thinking it's China that's the issue, or it's the Russians, or it's the U.S. domestic policy. I'm like, no, Europe is in trouble, and they're the most arrogant people who think that they're inevitable, that the EU's model for the world is inevitable. We're all going to just be European commies now, no matter what you do. And like, I'm watching them, I'm going, you guys are like the biggest putzes on the planet. Like, I don't know what else to say. They're just funny at this point. Like, they go up there and they stand up there and they're all terribly arrogant and European. We have all the tools that we need and we can do whatever we want. And then Christine Lagarde gets up there and she starts reading the policy statement and she's like swallowing hard every third word because she's just like she swallowed a squirrel or what's left of her conscience because even she doesn't believe what she's spouting because she knows it's all nonsense.
Yeah, she definitely doesn't have one. She's like they're like the multi-headed Hydra. You've got Carson's and Lagarde and Yellen, and they all just kind of squeal around. That's my personal image.
Yeah,
sorry.
I'm more worried actually now about how gold and silver react. No, mostly gold and Bitcoin react here. I'll be honest with you.
Yes,
because if we don't see a major safe haven bid here, then we're in a dollar liquidity spiral. That could be very dangerous.
Yeah, okay. It's interesting. When the announcement came out, Bitcoin, it looks like it's now getting close to testing 20K.
Yeah,
which is interesting.
And I think the 18.5 to 20 area is where we could uncover a lot of technical support in Bitcoin. That's where the breakout level was that sent us from 20 grand up to 68. Right now we've corrected back to 20. And don't forget one other thing here. The empire is striking back. Like, this is big. Like, everybody in the central bank community and in Davos and BlackRock and all of these guys, they are all going for it. They have to break the backs of crypto investors. They have to destroy your confidence. They've got to abandon all hope, ye who enter here. I mean, we really are in that mode, and they have the power to do this. They have the ability to just between the Fed crushing dollar liquidity, obviously, and then everybody else piling on and, unwinding complex DeFi trades and all this other stuff, which is easy to do because there's not that much liquidity ultimately in Bitcoin. Like, you can move the markets like crazy, and that's okay. Price doesn't matter here. What matters is when it finishes, you buy more because high quality assets are still on sale. Like, anybody who thinks that gold is worth $18-17 an ounce, which I'm looking at right now, is an idiot. Gold is worth $18,000 an ounce, but it's being suppressed because there's 1,000 times more freaking paper gold out there than there is physical gold available on the market. And when all the physical gold goes away, the paper markets are going to bid to zero and everything's going to go. And then we're going to have dogs and cats, then it's going to be horrible things. Then it's going to be, then it's going to be fire and brimstone and the rest of it.
I would argue Bitcoin is the only asset worth
well, owning, I think Bitcoin is going to be mired in a bear market for a little while. I really do. And I think it's because, I don't know. We'll see. I can see Bitcoin rallying on European capital flight. Okay. I can see Bitcoin rallying on emerging market capital flight. But if everybody's still biblically short dollars, which is what we're seeing.
That's such a great expression. Biblically short dollars.
Then, it could take a while. Right.
Yeah. Yeah. I mean, also we're sort of in the bear part of the 4-year cycle.
Right.
In terms of the halving.
We're in the bear market portion of the bear. Yeah. So they were able to crush the top end of the super cycle high for this 4-year cycle. And now they've pushed us back down to where, to the lows. And so, if we wind up bouncing around between 15 and 20K for another year and a half, is that a bad thing?
I mean, it's
not if you have a 10 or 15 year time horizon on Bitcoin.
I would say even shorter, but I mean, yes, it is a fantastic buying opportunity. Generational.
Yeah, of course it is. Just like $8,000 was just like $5,000 to $8,000 was a generational buying opportunity back in late 2019, right?
Yeah. Yeah.
So that's the way I looked at it. That's the way I told my subscribers, and I did my best to try and position them as well as possible on this. I'm more interested in like watching this play out. Like, at this point, dude, I'm more interested in watching what the Russian ruble is doing, and like all these other things. These are all far more interesting to me. Bitcoin is going to be fine. There's nothing wrong with the blockchain. Do you have your coins? Are they on an exchange? Get them off an exchange.
We were just talking about that. Yeah.
Not your keys, not your coins. Well, that's just standard operating procedure, right? And it doesn't matter what coin you like. I've talked about it before. I'm not a Bitcoin maxi in the long run. In the short run, sure. But I don't want to get into the philosophical.
Come back to us, Tom.
Cut his mic.
No, I'm dead serious when I say this. I mean, in the short term, when I talk short term in Bitcoin, I'm talking 5 years. Bitcoin is going to, Bitcoin is the best place to be, and of course, the entire market is based on a derivative of Bitcoin liquidity. So at the end of the day, the maxi argument from that perspective, I completely agree with. But dude, I'm talking about when Bitcoin is, when no one wants to listen to me talk anymore. And I'm Henry Kissinger sitting in a friggin' chair, drooling on myself. And crypto is the world, and crypto is taking over the world. Are we still going to be talking about? Are we still going to be talking about Bitcoin being the only coin in existence?
Yes.
Have fun with your religious fundamentalism. I'm not.
I know.
So there you go. But I don't think. Look, the important thing is, neither of us need to be right.
Absolutely.
That's what's important.
Absolutely. And I think we don't need to go into it in too much detail, but to me, Bitcoin is completely separate from all the other stuff. They're designed to do very different things. You have Bitcoin, which is designed to be sound money, decentralized, censorship resistant, all these things. And then you have, these other aspects of the space, which in my opinion are designed to be ways for, they're designed to be more like equities, in terms of the way that they interact, and people can fund them and play all these games and stuff like that.
Right. And remember, Phil, don't forget this. When I'm talking about not being a Bitcoin maxi, I'm still a proof of work maxi. Like,
interesting.
Okay, I'm an absolute proof of work maxi. I'm no freaking Ethereum dude. Like Ethereum. Like seriously. Like I'm not into any of that. I'm a proof of work maxi. Like meaning I think there may be better. We may wind up with better technology that looks like Bitcoin, but Bitcoin is incapable. We don't know what Bitcoin is going to be capable of when it's running the system. We see it now as the ultimate tool to break the debt fiat slavery system, right? And it's performing that tool in that milieu, in that regime. It's doing a pretty damn good job of it, okay? And it's doing it brilliantly, okay? But it's never operated on its own versus other things based on the same technology and based on the same ethos. And I think that is the only reason I'm not a Bitcoin maxi. Okay.
I mean, it's interesting.
Simply because I understand that the law of diminishing marginal utility applies to everything, even Bitcoin. It's just that simple.
I think the counter argument.
I just don't believe that there's any reason. I don't think there's any reason why Bitcoin should adopt every aspect of a software project necessary to run a global financial system. I think it's dumb. I think it's bad for Bitcoin in the long run. Yeah, I just do.
I mean, I think
I don't want my word processor to be a database. Okay. I don't want my spreadsheet to be a word processor.
Yeah, I hear you. I mean,
that's my point.
Yeah, and I think, just to push back a little bit, Bitcoin adapts and changes as appropriate, and as the consensus kind of drives change. We just had Taproot and Schnorr, which is an improvement, and eventually the protocol will ossify. When that happens, we don't know, but yeah, you're absolutely right. Like, Bitcoin is designed to be sound money, and there are things that you can build on top of it that rely on the strength and security of the network. We have the Lightning Network, which, for a long time, the argument against Bitcoin was, you can't buy a coffee. You're going to have to wait 10 minutes for the transaction to clear and the block to be mined.
And now we have Lightning. And I'm a fan of all of this stuff. I love the technology. I love everybody trying to prove me wrong about being a Bitcoin maxi. I'm a big fan. Like, I think it's great. I love human ingenuity. I love to see people working every aspect of the market. And I also love to see the other proof of work coins out there, forcing Bitcoin to get better. Okay. Because without Monero, for example, it's not, without competition, everything gets stayed.
But that's all. There's an ultimate issue, Tom, that I'm a little, to be honest, I'm a lot confused that you have this belief, because ultimately what you reintroduce in every other proof of work system, with the exception of Bitcoin, is a centralized point of failure. You have individuals or businesses that are pulling the levers that can introduce a point for a foreign country or a government or just anything to attack from that point and to hold them hostage and say, issue more tokens, do this to the network, do that. We don't have that in Bitcoin. And for that reason, it is the purest free market available to humanity right now. And so that reintroduction of a centralized person is the biggest flaw with every other proof of work system that you're describing.
Okay. I'll
because you're just introducing Jerome Powell and the Fed in essence. Like that's putting our faith.
I don't know the entire state of the market to know whether or not that is actually the case or whether or not that is a talking point. And I'm not going to, I don't want to get into that. I don't want to get into that statement because I
want to take it back. I want to take it back to a comment you said though about, what you may be seeing, what we may be seeing out of Europe as early as German markets opening and just the collapse of the entire European Central Bank and that money then inflowing into the US. But why would it? We saw the US institute sanctions on Russia for the US dollars that they hold. Why would any country in Europe just immediately opt to the dollar? Do we not think that money might be diversified? Maybe some aggressive allies might come here, but maybe others might say, piss right off. I'm going to go to Russia. I'm going to go to China. I'm going to go to gold.
I'm not, yes, you're right. But a lot of these guys don't have that option. Okay. We're talking about family offices. We're talking about bond funds with prospectuses. We're talking about so much of the managed money in the world today has a lot of rules associated with it. There's only certain things they can buy. And until that money is, pension funds, this, that, everything else. So the reality is that as bad as the political system, and look, and don't get me wrong, this political system here in the US as of right now is a mess. And if you don't think that was part of the design of the project in order to freeze capital in emerging markets in Europe and keep it from flowing into the US, because it would have already flowed in here 3 years ago had Biden not been elected president, or 2 years ago had Biden not been, I'm sorry, I used the word elected. Let me, please forgive me, selected as fucking president. If that had not happened, if Trump had been inaugurated, this would have already happened. Okay. And it would have already happened because we would have had political stability in a way that we haven't had it before. We now have a Federal Reserve, a central bank, who is climbing the wall of worry to get its credibility back. Whereas everybody else is torching their credibility. The Bank of Japan is torching its credibility. The Swiss National Bank has turned into the biggest equity hedge fund in the world. The ECB is laughable. It's badly designed. It can go bankrupt, and it has no actual control over everything until the ECB is completely reformed, which will take 10 years. Okay? The Bank of England, they don't have any gold. They don't have any reserves. They don't have any assets. The Bank of Japan, the Bank of Canada, please give me a break. Who's left? The PBOC in China? Absolutely. I'm not going to argue, but PBOC, you still have a closed capital account. You don't have the ability to get your money in and out of China freely. So this is why the midterms are so important. A change in the political trajectory of the United States with its fundamentally decentralized government, even though it's fundamentally flawed, even though it's fundamentally terrible, even though there's so many problems with it, it's still the best dirty shirt, the cleanest dirty shirt in the laundry. And because of the decentralized nature of the American political system, has the ability to effectively dry clean itself slowly over time, depending on what the cultural situation in the United States is, which is why Biden's letting in millions of people into the country to destroy cities and destroy the suburbs and destroy, communities. It's why they're destroying the energy markets. It's why they wanted to destroy the tax base, the taxing system, remember, the United States is the best tax haven in the world. We're all Americans. We're looking for tax havens against the American government. But for everybody else, they're all looking at the United States going, this is one of the best tax havens in the world. Okay. So why do you think things like windfall profit tax on oil companies and wealth taxes on unrealized capital gains, those were all designed by people like Klaus Schwab and put into the mouths of the Lizzie Slapaho Warren to destroy the U.S. and by codifying it in a law and destroying our ability to handle capital. And why? To make Europe look better. Because in the grand game of global capital, you don't have to be the best. You don't have to be good. You just have to be better than everybody else, and only slightly better. Because everybody's trying to get that a little bit of alpha, that little bit extra yield. And you can offer them 0.1% more yield on your money with a little bit more secure, with 5% more security than the other guy. Boom, all the capital goes there. It rushes there, especially under circumstances like this, where we're on the verge of a potential World War III. So why do you think Davos is trying to get Biden to start a friggin' wider war with the Russians in Ukraine? Like, all of these things funnel into each other. They're all part of the same strategy, which is destroy the credibility of the United States. Why do you think George Soros is spending so much money undermining the validity of our elections? Funding Tranny Story Hour Day and undermining the board at Disney and all these other things that are happening. All of this stuff, the culture war, all of it, it's all tied to the same thing. European commies want their colonies back. And in the process, they're going to Bitcoin, because Lagarde has already told us if there's an escape hatch, people will use it. So we need to coordinate how to get rid of all the escape hatches, and they're all attacking them, and they're attacking every aspect of the crypto market right now. So, I mean, like, it's not hard. Think about where their power is. Think about what their goals are. See how they implement it in the world, and see who works, and then you'll know who works for them and who doesn't. I don't know why I'm the only guy like looking at it this way. It just seems so obvious, but I don't know. It's just I don't mean to be like I don't see why I'm the only one getting it.
No, but
maybe I'm crazy. I don't know.
That is the truest sign of insanity. We see the signs. They call us crazy until they call us right.
Right. I've been
Tom.
Yeah.
Sorry, I'm going to throw some things out that, we're gathering this information in real time. The FOMC press conference starts in about 6 minutes, but right now on Bloomberg, we just heard that, oh my God, what's his name? Scott Minard is talking about Bitcoin right now on Bloomberg as a result of this FOMC announcement. So we're going to be updating people with those comments shortly. There's also a couple other tidbits from the press release that are very, very important. The first being that the Fed is actually not expecting to lower rates until 2024.
The Eurodollar markets had that off. They're wrong with that. The Eurodollar futures curve has the Fed reversing course in March. Okay, go look at the Eurodollar futures curve as of this morning. Before the announcement, it had the inversion of the Eurodollar futures curve had pushed as early as March. There's a repricing that has to happen now. They're not, if the Fed's not going to raise interest rates before early 2024, that means actually, and honestly, in reality, it's 2025. They're just prepping the markets slowly but surely. They got to get everybody used to this stuff.
So let me ask you this: we have midterms this year, but 2024, as our producer Chris pointed out, like, that's a presidential election year.
Yes, it is.
So, do you think Biden may or may not try to, or whoever's president in 2024? Personally, I genuinely believe Kamala Harris will be president in 2024.
I do not.
Not by the election, but because Joe Biden just says adios.
It will not be Kamala Harris. And if it's anyone, it'll be Janet Yellen.
Kill me if Janet Yellen is the president of the United States.
Book it. It'll be Janet Yellen.
Oh, I mean, okay.
Who else?
Well, we're going to.
It's not going to be Harris because she's a moron.
But she's the vice president.
They'll get her. They just get her to resign first, and then Biden will nominate Yellen. No, 25th Amendment. If the vice president resigns, the president can nominate a new vice president. Go read.
You're saying that
Kamala will resign than Nelson first. Rockefeller and Spiro Agnew, 1972.
Okay.
I wrote about this a year and a half ago, guys. I handicapped this thing out a year and a half ago. That when they're finally ready to get rid of Biden, they're gonna pull in Italy and put a central banker in charge of the country.
Well, we are going to be so royally fucked when that happens. But until then, So
no, if the GOP takes over both the Congress and the Senate, they're all going to get impeached. They're all going to go to jail because the political mood in this country will be so ugly. Look, it all depends on how big a majority the GOP wins in the fall. Okay. If it's 100 seats, if it's Boris Johnson level historic, which he has squandered because he's a moron, because he's a bozo, because Bojo's a bozo. If it's 100 seats, which it should be, given the situation, that also means 5 seats in the Senate. You're talking about 11 Democrats voting to impeach the worst president ever for being a traitor to the country. Because at that point, the political situation in D.C. will be so poisonous that in order for any of them to keep their jobs, because they're going to be looking at the 2024 election, they're going to have to, those House members are going to have to figure out what to do then. The Senate is going to be looking at a third of the Senate is going to turn over in 2 years. And the Republicans could easily then take another 5 seats from the Democrats, if not more. Like, I'm dead serious when I say, if a GOP presidential candidate emerges with a Reagan-esque style, we can rebuild America, but first we're going to have to go through a lot of short-term pain, near-term pain, and we've got a Federal Reserve chair that has already set the stage for it, we can actually impeach most of these people. But I don't know. I mean, it's a fantasy, but I don't give it as non-zero probability.
To be honest, I still fantasize about Donald Trump being in, to be honest, Tom, I still fantasize about Donald Trump being in bar. So I'm going to end the conversation of whose fantasy wins here.
I'm just saying, look, 25% probability with a 100-seat majority in the House, the Biden gets impeached and thrown in jail as a scapegoat for what they did to the country. And then the GOP starts to reverse half of what they've done to cock up the energy markets and gasoline and healthcare and everything else. And most of the stuff just gets, and with the lack of spending that got pushed through under Biden, under 2 years of Biden, the fiscal side is already set. All they have to do is put a hold on spending and pledge entitlement reform. And the market will absolutely reward us for that. Especially if Europe is in a sovereign debt.
You think the market will reward us for not spending money?
Yes.
Right now? Why?
Absolutely. Because we are running a massive budget deficit and interest rates are rising. And every point that interest rates rise is another $300 billion in debt servicing that we have to pay out to the existing pile of debt that's out there. So we have to cut the budget deficit. We have to cut spending. We have to cut spending by $1 to $2 trillion at the federal level to handle to get through the situation that the Fed is now putting us in. This is what I've been saying. This is the Congress tried to blackmail the Fed with $7 trillion worth of new QE. And now the Fed is blackmailing Congress saying, you got a spending problem.
Right. But the Fed also spent something to the tune of $6 trillion in that time as well. So I think that's a little bit misinterpreted here. The Fed also was buying up bonds. The Fed was spending money just at the same time Congress was. They were not as public.
Congress spends the money. And the Fed has to figure out how to keep the exchange rate from getting destroyed. The Fed is not always the enemy here. I hate to say this. I hate to break this to everybody. But Congress is just as culpable here. They usually work hand in hand to screw all of us over. But we're now in a weird situation where the Fed and Congress, for the first time in ages, are against each other. Fiscal policy is just as important as monetary policy. Because look, Powell can create all the dollars he wants, but 6 trillion of them have been sterilized. They're not flowing. And if they're not flowing, they don't matter. Were you asking why Bitcoin's 20 grand? It's because that $6 trillion is not flowing. That's why Bitcoin's at 120 grand. Yes, in the long run, the comment says they're all the enemy. Of course they're all the enemy, but not at all moments in time. I know I'm speaking to a Bitcoin crowd here, but you guys have got to get through your head that order of operations matters. These markets are far more complex. The relationships are far more complex and more nuanced than all of that. If you want to put your head in the sand, just go, yeah, when I'm older, Bitcoin will win, great. Then you don't need to ever watch any of this stuff because you're on a path. You're on the same path Peter Schiff is on, saying gold will eventually win. And you'll be right 20 years from now, 15 years from now. And if it doesn't matter to you, great. Go do what you like to do and just don't worry about this stuff. But if you want to know what's happening in real time and to make the best decisions in real time, well, then you gotta dig into the details of these people. So, okay. I mean, you've got to be Machiavellian, as the commenter Christopher just said. It's very, very important, guys, that we do that. That's what I try to do because I used to be like that. I used to be that guy. Oh yeah, well, just buy gold. Don't worry about it. 20 years from now, you'll be right. But I can't do that and be a credible analyst. I can't. The game is far more interesting than that. There's so much more detail. There's so much more there's so much more nuance. And we can learn so much more about how this actually works and how we're going to beat them. Because we are going to beat them. There's just a question of how we do it. So Powell just started speaking and gold just dropped $5. I love it.
Bitcoin has also dropped about 2.5%. Tom, I'm still not over this because I agree with you that yes, Congress spent way too much money. I agree with that point.
And the Fed had
However, the Fed was also, P, I do hear an echo. The Fed was also spending money separate to what Congress was spending. And by our calculations, the Fed printed and spent $9 trillion. So I'm confused as to why you're not pissed off at Jerome Powell and the Fed for doing that, pumping up the market to levels that it should never have gotten to, making people think that we are in this golden age of the US economy when it was just, we were printing money at an insane rate. And then we are witnessing, let's roll it back a little. And what's happened? We've seen the NASDAQ crash 25%. We've seen the Dow crash almost 20%. We're seeing the S&P in a full bear market. So I'm confused as to why that $9 trillion is not an issue to you.
It was, but God, dude, was it $9 trillion over what?
Since 2020, the
Fed raised its balance sheet by $9 trillion. Congress spent at least that much money. Did you see the budget deficit for 2020?
Right, but then why are both parties? Why, in your opinion, are both parties not equally culpable here? Why are you saying that the Fed is fine to do that?
Remember, when Congress approves all of that spending, the Fed is part. The Fed has to react to that. Look, COVID is, in my estimation at this point, was a project to keep the Fed from tightening markets even further. I'm literally believe at this point that Powell was ready to gut all of this wealth effect stuff back in 2019. Okay, he came in and raised interest rates aggressively. He came in and allowed the American banks to stop repo collateral, accepting as repo collateral anything from a European bank, which caused the SOFR blowout and the repo crisis of September 2019, which meant that we were going to have a financial crisis in March of 2020. But that was a design because the sovereign debt crisis in Europe should have started in 2020. And the world politicians got together and forced everybody onto this. It forced everybody into their homes and broke all the markets. Like when Russia said no to a production increase, right? Which is what was the proximate cause that caused the corona apocalypse. On Friday, Russia says no to OPEC. We're not raising production. On Monday, oil dropped 50%. Do you think that was a normal thing? Or do you think that was a coordinated action of a whole bunch of really evil people? I've never seen oil drop 50% in a freaking day.
Oh, I fully agree with you on this point, and I'll take it a step further. I don't blame anyone on the U.S. soil for oil prices right now. I blame the mafia that is OPEC for us laughing 2 years ago when oil got to negative, and they may not necessarily buy into the idea that, oh, the world is going to be green, but they are viewing this moment as their last opportunity to cash in. So they are going to squeeze.
That's one way of looking at it. I'm not going to deny that. I just think that they're doing everything. They're going to do what's in their best interest. Everybody acts in in their own best interest, of course. And so OPEC is irrelevant at this point. There is not a real need. I mean, the OPEC for the most part is irrelevant. They don't need to raise production. The problem with gas prices and oil is not. This is a structural problem created by COVID. Okay, we lost over 2 million barrels a day of refining capacity worldwide during COVID. We lost 10% of worldwide, or not 10%, but 2% of worldwide refining capacity over the last 2 years. And the Biden administration is trying to take another 2 million barrels of oil a day off the worldwide refining. Okay, and here in the United States. So we've got all the small tin pot refiners here in the U.S. 36 of them asked for a hardship variance against having to buy RINs offset credits to not blend ethanol into their fuel. The Biden administration told them all to go scratch. Okay, so you're paying $6 of gasoline because RINs are $3.30 a gallon, not 80 cents. Okay, because the refiners can refine this oil at $3 a gallon or $3.80 a gallon. And the Russians, and if we didn't cock up the entire supply chain for moving oil around the world with all these sanctions, and we still had 2 million barrels a day going from St. Petersburg to Rotterdam and back again, and now all those same ships have to go over to the Bahamas or to India or to Greece or somewhere else, be reblended, and then sent back to Rotterdam. Like all those extra voyage days adds to the cost of oil. The Europeans are implementing an oil embargo because they believe they have monopsony pricing power. No, everybody talks about monopoly pricing power. Everybody wants to get angry with the producer for trying to raise prices too freaking high. When it's the truth, when the truth of the matter is that the European Union has been acting like, well, we're the only marginal buyer of Russian oil, so we can dictate price to the Russians. And the Russians are like, no, I'll sell it all to the Chinese and the Indians. So you're not the only buyer. And this is the problem. The Europeans have tried to push monopsony pricing power onto the Russians. It's failed dramatically, and everybody's paying for it now. And these people are too fucking arrogant to stop. They're just going to keep going because their goal is a global depression. That's their goal. Now, Powell is going to help that but he's doing it in his own best interest to try and save the Fed and trying to save the commercial banks here in the United States. But the Biden administration is absolutely attempting to destroy our ability to handle capital. Without doubt. It's been a planned destruction the entire time. And this is what's going on. So if the Fed pumped money into the banks and printed all this money, that money's all been sterilized. Excess reserves have gone from 1.7 trillion to 3.9. The reverse repo facility went from 450 billion to 2.1 trillion. That money's not flowing, so it doesn't matter. That's not what's causing the inflation. Now, the Fed has a problem when that $6 trillion has to flow. And we'll see and they're trying to sell treasuries into this. They're going to try and shrink their balance sheet into this market when there's no dollars out there for people to buy. But there's also going to be there's also going to be a collateral shortage because there's also going to be a collateral shortage as well as savings rates around the world start to rise. Here in the United States, there's going to be no savings. The reason that the savings rate is going to be low is because nobody's going to need disposable monthly income. But the minute all of this, the Biden administration gets out of the way of allowing energy prices to drop, which could happen in no time flat. All they got to do is lift the sanctions, do away with all the stupid green shit, and stop trying to save the world for climate change. That's all they got to do. Tomorrow, gasoline would be back to $2.90, $3.30 a gallon, depending on where you are in the country. Diesel fuel would be reasonable. And people's disposable income would rise, and you could sell their treasuries into that market. But the Fed's going to shrink its balance sheet because it has to, and they're going to do this, and they're going to do it quickly. And I think that they're going to do it because they don't have any other option. They have to get in front of this situation. Okay, they have to prove that they're on point here, and that at some point they're going to force fiscal discipline onto the world. The Fed doesn't want to be the keeper of the world's reserve currency anymore. He's basically said this. He doesn't want it. He wants Triffin's paradox to end, and he wants the United States to balance the budget.
So, Tom, I want to read some of the minutes that our Bitcoin Magazine team is taking from the press conference as it's happening. Some of the things that has been said so far, because it's happening right now as we're live. I'd love to get your reaction. So, Powell's saying, we're strongly committed to returning inflation to our 2% objective. They want to significantly reduce the size of the balance sheet. They're saying that inflation has once again, surprised us to the upside.
Of course, they have to say that.
I know, right? They're saying that they are expecting either a 50 basis point or 75 basis point hike, a further hike for the next meeting.
Okay.
And they're saying that hikes will continue depending on incoming data. Right. And that they're saying that
that's standard Fed speak.
I know, right? They're saying that hikes will continue to depend. Wait, hold on. They said over the coming months, we will be looking for evidence that inflation has been turning down.
Sure.
Which I think is a very funny statement to make because, of course, you find the evidence you're looking for.
Right. Well, I think that the big thing here is that everybody is looking for demand. They're hoping that they can get some kind of demand destruction. The problem is that they can't get demand destruction in the things that matter to most people, right? You can't do anything about the economy. You can't do anything about the core pricing. Okay. And core inflation is the thing they never want to look at. Right. So they always want to look at the headline number where they, where they heuristically adjust in, this yacht sales and everything else. And then go, oh, look, inflation is not too bad because, yacht sales are down 30% and whatever. It's just dumb. FYI, now gold is at 1840 and rising. The more that the Powell talks, now gold is finally starting to rise. So we're starting to see that, and Bitcoin has stabilized as Powell talks. So very interesting to watch in real time the reaction to the market. They are crashing the economy on purpose. Okay. But it's because it has to be done. We have a malinvested economy. We have trillions of dollars in unsustainable capital that need to be liquidated and moved around into sustainable projects. And that's the problem. We have markets that are so cocked up, okay, that are such a freaking mess that there's only one way around this. And that is for someone, and in this case, it's the most powerful Ponzi scheme in the world, to collapse the offshore dollar markets. And I've been saying this for a couple of weeks now. The Fed's not raising rates to stop inflation. The Fed is raising rates to collapse the offshore dollar markets and get control over its monetary policy. Once you see it from that perspective, you know what to do. Buy gold, buy Bitcoin, buy safe haven assets, buy undervalued real estate if there's any left, and then watch the situation with the Europeans. There comes a point where you have to realize that the boom is the problem. Keynesians don't see it that way. They're wrong. We Austrians see it that we see the boom as the problem and the bust as the cure to the disease. Okay. The disease is, too much money. So money has to be destroyed. And that's where we're headed.
I would jump in. I just feel obligated to say, I would say that the solution is buy Bitcoin, also buy Bitcoin, and then buy more Bitcoin. We are, in fact, pumping right now, interestingly. We briefly went down after the announcement was first made, but we are screaming up. We're up almost 8%, which is...
Yeah, no, I'm seeing it now. I got my quote screen from investing.com up, my watch list, which is quite extensive. And it just finally flashed green. Bitcoin 30 seconds ago was still flashing down $1,800 for the day, and now it's up $12. So yeah, the safe haven, as we said while we were doing this live, we said, how is the safe haven trade going to look in this environment? The first phase of this was a massive dollar bull wave where everybody wasn't sure what to do. They didn't really believe that the Fed was going to raise rates, yada, yada, yada. Everybody got the cash and said, okay, well, let's get the cash and let's see what we're going to do. And that's the first wave of this. And I told my people this, and I wrote articles about it, and I gave a dozen interviews on it. And I said the same thing. I said, don't worry about the first phase of this. This is all just the first, everybody getting used to the idea that we're in a U.S. Treasury bear market which we haven't seen almost the entire since I was a boy. Like, we haven't seen a U.S. Treasury bear market since I first saw The Empire Strikes Back. Okay, and then, because I date my entire life based on when Star Wars projects come out, and then we have that. We have a Treasury bear market that no one knows how to trade, and everybody getting into cash, and Europe in a doom loop over having to buy oil and gas and commodities from the Russians and have to pay for it in appreciating rubles versus depreciating euro, which the Russians have no use for anymore. Go back to one of the points made earlier. Why would anybody buy dollars or buy U.S. assets if the U.S. is just going to treat them so shabbily? Again, the use of sanctions was designed in order to scapegoat, in order to turn the U.S. into the evil empire to everybody around the world. If we change that policy, if the sanctions begin to lift, if the United States, hell, if we get a GOP Congress that just says, you know what, we're repealing CATSA, forget it, everything changes. Like, the whole structure, the whole world gets a completely different message. Do I think that's going to happen? No. Do I think we're in the next 2 years? No, I don't think it's going to happen. But do I think it could happen during the first couple of years of a DeSantis presidency here in the U.S.? Absolutely. So, I mean, like, it's a weird thing that we're looking at this point. But you got to realize that the first phase of this was a dollar bull wave. The next phase of this is, oh shit, I need to be in safe havens. And we're going to see that. And I've been waiting to see if this was going to be the Fed meeting where we finally started to get some kind of bid on safe havens. Now, I'm going to say that they're going to say this, and this is the big thing. I like to see a $25 bounce in gold, but until gold retakes the 1900 handle, this is just a dead cat bounce. Same thing with Bitcoin.
That was going to be my next question.
Before I'm even interested in it again. So
that's my next question here is, like, we're talking about gold going up. We're talking about Bitcoin now going up. I mean, all three major indices have been going up all day for the most part. This reads to me, when I just look at that, given the light volume, a dead cat bounce. So while I give merit that, yes, Bitcoin is pumping right now, I also don't believe the NASDAQ is going up, and nor do I believe the correlation between the two has disintegrated. Nope. So by that logic,
I'm not a big fan of correlation trades, by the way. I think I'm enough of a statistician to know that correlation doesn't necessarily imply causality. So, like, this NASDAQ Bitcoin trade, maybe there's just there's a bunch of guys on Wall Street just playing that game and knowing full well that the NASDAQ was massively overvalued, and they can play, they were playing some kind of weird spread trade, and knowing full well that they were going to bail on their NASDAQ trades, and at the same time, we're going to bail on their Bitcoin trades. Like, I never understood why that correlation trade existed. So I never gave it much thought. If people have good reasons for why they think that trade is reality, I'm all for. I'm open ears, right?
I'll give you my playbook. I haven't treated it like a direct correlation. I've treated it like a tape delay of 3 days. So I've traded puts and calls off QQQ based on that. And it's been a very lucrative opportunity because every private fund has just calculated their own beta on Bitcoin and treat it as a version of some sort of an asset class. Maybe they're treating this as their crypto allocation versus getting involved in to other sketchier cryptos. Regardless, that movement to me sends the sign that this is being moved by private money, not by retail, not by whales. Like, we want to think that.
No, it's being that makes sense. Okay, cool.
Great. There's another thing we talked about. We're coming up on the end of our time.
Before we go any further, the one thing I am interested in here is I'm watching the euro bounce.
The euro's bouncing.
Yeah, the euro bounced to $1.45.
What's the Dixie doing right now?
The what?
DXY dollar index.
The DXY is 105. So it's down a little bit. Meaning,
interesting.
Well, that's because the euro's up nearly a penny, and the yen is off, and across the board that's fine. So
you
it looks
think that a rising rate would increase the value of the dollar, no? Or am I misinterpreting what that should be?
Well, no, the market must have obviously thought that there was an outside chance of the Fed going 100 basis points to them. That's all that means.
Okay.
And you also have to remember that the market was overdone this morning. Like one of the problems in doing this stuff in real time is that we all want to, lay blame or make sense of what's going on, right? And it's part of the problem with trying to do financial news. It's not really particularly instructive ultimately. I mean, unless you're like running a trade, like if you're trading, you're doing like the trade you just outlined, that's fine. I don't do that, right? I don't even trade. Like I don't trade at all because I'm terrible at it. I tend to look at things within the larger macro trends, right? Meaning I only look at really weekly and monthly and quarterly charts anyway. I never really even look at daily charts. Like my if I put up a daily chart, my subscribers are like, oh wow, this must mean something. Because it happens like once a year. Because I just don't care. Because I only really care about weekly closes and I only really care about monthly and quarterly closes because that's what's going to tell you the big macro. That's what's going to tell you what's actually going on in the markets in a long-term horizon. And, I'm servicing people basically with a monthly newsletter. So so the weekly charts are my tactical charts and my strategic charts and my monthly and quarterly charts. I mean, it's just I'm telling people to move money around every quarter or every year or whatever it is. So it's like, it's not a big deal. That being said, I invariably don't care about day-to-day movements and hour-to-hour movements or anything because I don't put any stock in them whatsoever. Unless there's some kind of technically significant bounce. Like if we were sitting here talking and gold was trading right now at $1,900 after this, I would be like, wow, because that would be technically significant through the daily chart, the weekly chart, the monthly chart, and the quarterly chart. It would change the direction through time of the entire gold market. This is just noise. All of it today is just noise because the market already did all of the honest to God thinking about this beforehand. And afterwards, the aftershocks are going to tell you the reality of whether or not this is going to be what the direction is going to be. Are we going to get a continuation of the current direction of most of these markets, or are some of these markets going to reverse? And that's all we really care about. And I'll be interested to see if the Dow Jones can pull off a massive rally for the rest of the week. Like the Dow Jones needs to get back to like almost 32 to even be interesting, given what it did last week and given what it's done so far this week. Like the Dow being up 320 points right now is irrelevant to me. It's useless because it means nothing. Go look at last week's month. Go look at last week's bar for Christ's sake. It's terrible, right? We're just still I think we're still even trading within last week's bar. I don't even think we've hit an outside bar on the value. I'll pull it up real quick just to make sure I'm not talking on my ass.
No, we're out.
Yeah, no, we're out to the downside. Yeah, we are. That's right. It opened low. That's right. The Dow opened low this week, and so now the Dow is in a situation where the Dow needs to get back to 32 just to like stabilize. But I think we're, looking at the situation. Yeah, this isn't even a bounce. It's not even interesting.
We're volume people.
We're going to 29 in the Dow before anything else happens.
I have the Dow chart pulled up, especially once you said it, and I'm looking at that 29 because we have that gap up back in 2020. Once we break below 29, we are fucked.
Yeah, I mean 29.5 is the breakout level, right? That was it's the January top, and then the first attempt to get through the January top after the Corona apocalypse in August, and then we'll and whenever you guys want to end this, we're good to go. And then
I'm sorry, Todd, we do have to end just because we are hopping over to Twitter, but I want to give you the opportunity really quickly to tell everyone where to find you, where to stay up to date on your newsletter. We're going to have to pick this conversation back up soon. Maybe we'll get Ansel in here as well too, so bring you back to FedWatch, but please shill away.
Oh, sure. I mean, I don't have a lot to shill, but I'll shill anyway. TFL1728 on Twitter. That's if you think I'm prickly here, just go follow me on Twitter. It's even worse. The blog is tomluongo.me, Gold, Goats, and Guns. From there, you can sign up for the Patreon or listen to the podcast or whatever. All of it's all branded the same way, Gold, Goats, and Guns. The newsletter is the key. So is the Patreon, because that's where I do a lot of stuff behind the paywall that a lot of people don't see. And I think that's where the value really is driven, because I have a community behind the scenes where we all chat all day long, as well as I'm constantly doing, private podcasts and private posts, which are usually the first. My patrons are going to get my best ideas first, and then they'll leak out into the world. and then we'll have a conversation like this one later on. So like that's
Tom,
who I test all my best ideas out on them first. So
Tom, thank you so much for your time. Guys, we are going to do a hard wrap right here. Pop on over to Twitter and join us for the FOMC recap spaces. We have an exciting panel that we've put together for you guys there. So we'll keep it churning just on a different platform. See you guys.
Thank you.